So what I want to show you today, what I want to show you guys today is how to analyze the market to catch a momentum. Okay, because that is what most people like. That is what most traders like to do when they enter the market. You only want to call and put at the same time. For instance, you only saw what happened here, that we only have a bullish momentum. Then you want to only catch this at least 3 candles here, or 4 or 5, before the market reverse. You only want to catch any of this momentum here. So, but now you can see the market has already moved. You don't really know what happened, why the market formed this momentum. Here also we can see very strong bearish momentum, okay? But you don't really know what happened, why the sellers entered very strongly. So, but today I'm going to give you some clue on how to identify the setup. Okay, there are different ways to trade this momentum, but I want to show you how to identify the setup. Okay, let me bring out the screen recording. What's going on? So I want to bring out screen recording so that I'll be able to record you. I don't know why it's delaying so much. Okay, so let's start now. Okay, so I think now I'm recording it. Okay, so like what I'm saying is, you want to know when you should catch up, or when you should grab this kind of movement, or when you should grab this kind of movement. There are different ways to, there are different setup you can use to grab this kind of movement. But the one I want to show us today is the first method. Maybe during our next classes, we are still going to discuss other methods, but this one first is the first method to catch a momentum, a bullish rally momentum, or a bearish drop momentum. So let's continue. Now, when we talk about momentum, I'm only talking about whenever you see like two or more candles, starting from the support level, then rise to the upside. That is what I mean by momentum. If you look at the chart here, you can see bullish momentum. Then if you see where the market stop at this area here, at this zone here. And within this momentum, we can only see one bearish candle until the buyer stop at this area before we start seeing some sellers entries, try to push the price down. Okay. So when we talk about momentum is when the buyers are active. The bullish momentum is where the buyers are active than sellers, which means this is the power of buyers starting from the supports and end at this level. So buyers only buy the market at this moment, no sellers. Only few sellers trying to push the price down. Okay, sellers try to push the price down. So this is a sign of weakness for sellers. Okay, but the buyers still have the guts of this, still have the power to push the price higher until they finally reach a level where they stop. Then from there we see the market start manipulating. So we see the sellers start manipulating the price movement. So, but today you only want to know how to catch this kind of. You only want to know how to catch this type of momentum, whereby you place call and place call again on the next candle. Then look for the next setup. You place call and place call again like 2 to 3 times. Okay, for instance, if you look at the chart here, you will notice that the market did reverse from this level, but afterward we see a buyer's entry. Okay, buyers entered and again sellers enter, you might decided to go with buyers again on the next candle, right? But it's wrong. Then you see again the market also reversed. Then now you finally saw the buyers entry here. You decided to go with buyers. But why is it that the buyers did not continue the market here, or continue the market here, or continue the market here, but finally continue the market to this level? So that is some of the one of the most important thing you have to observe by using this setup. Okay. So now let's go straight to the point. Now, when you want to look for a bullish rally momentum, there are 5 things you have to consider. Number one is there are 5 things you have to consider. Number one, the market structure. The market structure. That is number one. Number two, BOS. You know what we mean by BOS? Break of structure. Okay. Like for instance, if it is a bullish rally momentum you are looking for, you look for break of structure low, BOSL, break of structure low. Then the first thing is the market structure. Then the second one is the break of structure low. Then the third one is level of interest. Level of interest, like support and resistance. Then the fourth one is demand, because you only want to look for a bullish momentum, right? The fourth one would be demand. Okay, so you look for demand. Then the fifth one, even though you see a demand zone, then you don't include this the fifth way, the fifth method. You miss out. So the fifth method is going to be a reversal candlestick. That will be your entry trigger. Your entry trigger is the fifth one, because even when you combine all this and you didn't have the fifth one, or you didn't observe the fifth one, you will end up missing out. Okay, so the first thing you have to look for is the market structure. The market structure should be like, if you are looking for a bullish momentum to the upside, the market structure for bullish momentum should be lower highs and lower low. Okay, then the break of structure, you only see that the market breaks structure low, breaks structure low, breaks structure low. So that is what we mean by break of structure low. Then the next one is the level of interest. If you look at this this area here, where are the level of interest? You only see that these are the level of interest. So what are you going to do in this kind of situation? You draw your trend line. You draw your trend line, something like this, okay? Then the third one is your demand. Then, I sent you a PDF about how to identify supply and demand zone. That when we talk about supply and demand zone, or for instance, you want to draw your demand zone, there are 2 things you have to consider. Either you look for a demand zone like rally-based rally, rally-based rally, then you draw your demand zone here, or you look for drop-based rally, you draw your demand zone here. So these are the things you have to know, you have to observe, or you have to look for. So you look for a demand zone here. Let's assume this is our demand zone here. Then the fifth one, which is your confirmation, that is, look for a reversal candlestick. The reversal candlestick could be a bearish candle at this level. So once you say bearish candle, a reversal candlestick, then you can decide to go with buyers. Then you might be asking this question, when as you are calling your trade, maybe you are placing call option continuously, then you might want to ask this question: where should we stop? Or where do we think that sellers will enter? Sellers will enter in the next resistance level, which means you have to be placing call option continuously until the price reaches the nearest resistance level. The disadvantages of this setup is that the market might just form a strong green like this. Then the next one will just be a small green. Maybe you are thinking of placing 2 candles or 3 candles. The first candle will just be a strong green. Okay, so this is one of the disadvantages. Then the second one, there are times the market might just form a strong green, one green like this, and the next green will be very small, then before the market reverse. Okay, so these are the things that you need to observe when the market, that means you look for the nearest resistance level. So that means the bias is going to stop at that resistance level or make a pause. Maybe the bias will pause for a while at that resistance level before continuing to the upside. So this type of patterns here is like a, let me say, uh, trend reversal pattern. You might be wondering that why did the market did not reverse here? Why did the market not reverse? But why did the price come to this level before it finally reversed? So now let's move on to the chart. So we're going to combine all these 5 elements together. Okay, so I took some trade discipline on this strategy, but forget to draw the screenshot to screenshot it. What the hell is this? Okay. So in this kind of situation, you don't, when you go to the left side, you don't see demand. That is why if you go back and watch the video about supply and demand zone, which I said that if you want to be using supply and demand zone, don't use the old zone, okay? Use the new one, the fresh one. So because the old zone rarely works, so use the fresh one. So don't go on the left side, don't go too far to start drawing supply and demand zone. Use the fresh one. Here, I didn't see any fresh one, so I'm going to be checking around. So this is uptrend, so we are looking for a downtrend. Yes, this is a downtrend. Then, okay, so let me see here. And if I should draw my supply zone with demand zone here, this is the demand zone because you can see drop base rally and the market did not reverse. It's after the market, so this is not the correct. This is another demand here. I think this is a fresh demand zone. Okay, because this is a drop base rally. Okay, so and that is our demand zone. Then what again? This is the market structure, lower highs and lower low. Okay, lower highs and lower low. That means you draw your level of interest. These are the level of interest. You see the buyer center here, buyer center here, buyer center here. Okay, these are the level of interest. Then where's the break of structure? This is the break of structure. Break of structure low. You see that the sellers break the structure low. Okay, but you'll be wondering that we might see some retreat, the buyer's entry here. We might see some buyer's entry here. But why do we now choose this as the buyer's level? Okay, so this is our demand zone, level of interest, break of structure, that is BOS. Then, and this is a reversal candlestick, okay? Because we can see rejection. If there's no rejection, don't decide to place it, don't place any trade. Okay? If there's no rejection, don't place any trade. Because when there's a rejection, it's confirmed to us that that market, the price, the buyers are available, are still active at that level. If there's no rejection, it means the market might still like form a small green, a small red candle, close at this area with the whole body before we can see the market reverse. So this one we can see a rejection. Okay. Then the market will now look for the nearest resistance level. This is the nearest resistance level. Okay. You might be wondering that why did I say nearest resistance level? Go to lower time frame. Always look at rejection, not until you expect the price to come to this level. Don't expect price to come to this level. Okay. Most of the time, you might see some price reaction here. Okay. You might see some price reaction at this level. When you see this type of pattern here, it means that there's a level here. Okay, so most of the time you might see something like this, but if you see something like this, you can still take that as a level. But if you go to lower time frame, like 30 seconds, you only see the market reject, reverse. Okay, that is the next level. If you see on 30 seconds, how many candles? 4 candles. But if you look at 1 minute, you only see 3 candles. Okay, so which means you can see what I said. The first one will be green, the second one will be strong green. Until they reach this level, then the market will just make some retracement. So once the price makes some retracement, it will continue to the next level. This is the major. This is the major level. So which means the buyers will continue. The buyers will continue the rally to this level. Okay. So which means the buyers will continue the rally to this level. And if the market will reach this level, there are so many things that will happen at this level. Either the price will make some consolidation before push to the upside, or make some consolidation and reverse to the downside. So it depends on what is going to happen at this level. Okay, so you can see that the buyers enter the market, but sellers still make some retracement. So when you want to enter the trade, this is where you want to enter the trade. Anything can happen at this level here, at any of this area. Because if you look at this area, we already have what we call sellers area. Okay, sellers area. We already know this is the sellers area. So the market might stop at this sellers area and reverse to the downside. Okay, so this is our sellers area. So buyers might stop at this sellers area. Okay, so buyers might stop at this sellers area. At this sellers area, before we can expect sellers entry. Okay, so which means you only enter the trade from the support to the nearest level. And at times, that is why you only see different kind of momentum. At times, if you see the market, if you see there's no level here, or maybe you see the buyers are entering the market and they cross the level, you will only see a strong momentum where there's no bullish candle, where there's no bearish candle. Strong momentum, something like this, where you can see some single candle retracement. So most of the time, once the price cross this level and cross this, you might see some strong candle. Or if the price will come to this level, no rejection. The next candle also close at that level, no rejection. Buyers might continue to the upside. Okay, buyers might continue to the upside. So this is how you look for a bullish momentum. So let me look for another bullish setup. Okay, you can see this one also. This is also another level. Yeah, I think there are some, you see this gap here. There are some demand here. But in this kind of situation, not only that you look for a demand, you also look for imbalance. There are some imbalance at this area. Okay, I think you know what we mean by imbalance. So if you don't know what you mean by imbalance, just let me know. I will send you the PDF for how to identify imbalance level. Come on. So just tell me. I will let you know. I will share the PDF on how to identify imbalance level. So there are some imbalance level here. But if you go to 30 seconds or 50 seconds, you only see demand. Okay, it will only look like a demand here. Okay, whereby you can draw the second line from here. Okay, this is our demand. So the price will reverse from that level. But on 1 minute, we are looking at an imbalance level. Okay, so which means we can still take this. This is the major demand. Okay, this is the major demand area. But before the major, we can see some imbalance here, which means the market closed at this level, the price gap down, a little gap down from a little, this gap down we are seeing here, the sellers try to push the price down. This gap down means that sellers try to push the price down. So when you see this gap down, it means that some sellers at this area. So that sellers here is the institution candle. because that is the last candle before this rally. Okay, that is the last candle before this rally. So that gap down is the seller's entry point here. That is why, but they did not show up. You know, this is OTC market. All the gap you are seeing will not show most of the bullish or bearish candle. Okay, so you see the market enter, the buyers enter, then we can see rejection. You can also see this level of interest. Okay, this is level of interest. Market reverse here, reverse here, reverse here. So this is level of interest. We can also see break of structure. Break of structure. Okay, this is break of structure. A structure low. Okay, because we can see lower highs, lower low, lower highs. Then the market break the structure low. Okay, so the market will now reverse from any demand or imbalance level before you can see that the buyers enter very strongly. They even cross the level here, but they couldn't cross this whole area. So that is where sellers enter. Then if you try to draw this area, you will notice that this is sellers area. Okay, so go and watch the video about buyers and sellers area. Sellers enter from here, sellers enter from here, sellers enter from here, sellers enter from here. So once the price comes to that area, we can expect some sellers entry. So this is one of the things you have to observe in the market. Okay, but here you can see we have the some demand at this level. So we have the drop, base, and rally. Okay, so that is how you identify the bullish reversal pattern. Bullish reversal pattern. Sorry, bullish momentum, bullish rally momentum, reversal pattern. Now, when we talk about the bearish momentum, bullish bearish drop momentum pattern, it's just the opposite side of how to identify the bullish rally momentum. For instance, the same method you use, but this one is the opposite side. You look at this, you have to look for the market structure, then look for break of structure, then look for level of interest, then look for supply and demand. Let's say you look for supply because you are looking for a bearish drop. You are looking for supply, okay? Then you look for a reversal candlestick. Okay, so these are the 5 things you need to look for that for bearish drop pattern. Okay, so now let's go to the chart. Okay, so let's say you are looking for an uptrend. Okay, looking for an uptrend. If you look at this here, if you look at this one also, you will see that the market also we have some level of interest. We have some level of interest here. Okay, then we have this drop, base drop. That is our supply. Look for the institutional candle, draw your other block. Okay, then you look for any reversal pattern. So we can see that this is a break of structure here. This is break of structure. You see that the market is moving higher highs and higher low, higher low, higher highs, higher low, then higher highs. So the market break the structure to create higher highs. So that is what we mean by break of structure high. So the market has break the structure now because tested this supply zone. So the price tested the supply zone with a reversal candlestick. This is a strong candle because of this momentum. Though we have a rejection, but it's still strong. Okay, because of this momentum. But finally, we can see reversal candlestick. Now we see that this is the next level. You see how many candles that form. And you see what happened when the price reached the level. The price did not reverse. Okay, they reached the level, crossed the level, but did not reverse. Okay, it depends on this kind of strength. If the seller strength is very powerful, they will not respect any level. Same thing in buyers. If the buyer strength is very powerful, they will not respect any resistance level. Okay, so we see that the market did not respect this level, but you have to follow the rules, which means once you enter a put option here, you start putting your trade up to this level. So once you reach this level, you stop. Nothing concerns you, the price will go more down. Except you see that there's no sign of buyers, you can still continue the trade. That is what I always do. Because if I see that I place my trade continuously to the next level, then if I see that the market did not even retrace or did not even reverse, or maybe the retracement is too weak to go more up, or maybe the momentum is very strong, then I can decide to place the trade continuously. Okay. See, I look for another next level, this another next level. But if I see the market did not respect, I can decide to place trade continuously to the next low level. So that is how you look for a bearish momentum. So let me check this. See the market here is creating resistance, level of interest. Then you can see other block. You see a drop, drop base drop. You can draw your supply. So you look for a reversal candlestick at this supply after break of structure. See the break of structure high. Okay, because the market is moving higher highs and now the price break the structure high. So we can see there's no sign of reversal here until the price touch the trend line and stay at the zone, then we can see the market did reverse. So here we see that we only have 3 red candles before buyers enter the market. When we see this type of situation, then maybe you are trying to place trade, you decided to place trade continuously to this level, right? You are deciding to place trade continuously, but you can see this is an uptrend. The market is moving an uptrend whereby you can identify the strong bullish power. Whereby you can identify the strong bullish power. This is an uptrend, which means the market can still stop at any of this trend line level. But if this trend line level is somewhere around here, you can place trade continuously to this level. Or if the trend line level is somewhere around here, place trade continuously. Or maybe the trend line level is here, then you see the market crossing, you can place trade continuously. So because the price reached this level, that is why we see the buyers enter. Okay. So you can still make use of this level or you make use of the trend line. So it depends on the structure of the market, how you identify the structure of the market. But you can see how many candles here after this reversal, how many candles? 1, 2, 3 to the nearest level. Okay. So it's just like when you are a forex trader, you sell at this level. Once you sell, you take your profit at the nearest resistance, nearest support level. The nearest support level cannot only be this, it can only be the next trend line level. Okay, it can only be this level or the next trend line level. That is called the nearest support level. Okay, so I think you're able to understand this right now. Okay, so if you have any question, you can ask now. I think I just want to make this short so that always question. Okay, so just go and practice it. It's very simple to identify this type of pattern. You know, this is the first way to trade bullish and bearish momentum. But the second way is very, let me say, too complicated. That one, it involves chart pattern. Then the third way is using indicators. This moving average. Okay, but that will be next class. That will be next class. So I will explain how to use other methods. But this is the easiest method that you can able to identify. Okay. Okay. So, what do you want to ask?
Can you? I have a question.
Okay. Okay.
So, why is feeling this pattern?
Okay.
Like now, this candle that is forming, this biggest candle that form now.
Okay.
It is at the supply zone.
Okay.
Sometimes, let's assume this was an inverted hammer. This
Okay,
bullish candle was an inverted hammer.
okay.
Sometimes buyers might enter again and may call it buyer's pressure because after this bullish candle, maybe it's an inverted hammer. The next candle might be buyers again. Can we call that buyer's pressure?
One thing is that if you want to be trading supply and demand zone, this is what you have to this is this type of level. You should look for this type of level. If you are trading only supply and demand zone, you didn't look for this type of level, you only see that the market will only retrace. Like for instance, let's say this is a supply zone. We look at this supply zone because we have this rally, then base and drop. This is the supply zone. So see what happened next. When the price reached the supply zone, it reversed, but still the bias still entered because we cannot make use of this trend line here in this kind of situation. We only make use of the trend line here, like this. Make use of the trend line. See the third time the price did not touch the trend line, so we can't make it. That's why if you see the price approach supply and demand zone, then the market still retrace again by giving you wrong signal. That means the market didn't get the strong confirmation to go down. This is a strong confirmation that the price will go down because it touched so many market confluence. Like for instance, it touched so many things here. It touched all this resistance. You know, the price are rejecting from this resistance to drop. So which means the price also might come to this resistance before it drops. But before it can drop, it must find a supply zone, just like this, or the demand zone. So the market cannot just reverse on at a supply or demand zone. For instance, if you look at this level here, uh, yes, you can see this is a support level, and they decided to place call option continuously to the next level because you saw the price at this support level. But we don't know that you don't know that there's no other market complex. The only market complex is at this support level. You are expecting the price to reverse at this support level. But what are the things that will make you confidently place your trade continuously? Nothing. Only the support level. If you see any chance of placing trades using the trend line, then you can decide that, oh, the buyer should enter because the buyers will use that pressure, the power, the buyers will use multiple confirmation to enter strongly in the market. So that is why you have to pay attention to all these structure level. These are level of interest. If there's no level of interest, your supply and demand zone will not work perfect. So I think I've answered your question. Then you can see that after this green candle, sellers still entered again before we now see the buyers. If you look at it very well, this is the level of interest. The price did not touch the level of interest properly. Something like this. Okay, it see the gap except the price come closer to the level before we can see. So the market did not touch the level. If you check on the left side, you can see some other block here. Demand zone. This is the demand zone. Drop, base, rally, and this is institution candle. Okay, so the market reverse exactly at the level. See the buyer's movement. So you just don't make use of supply and demand zone on its own. Make use of some other market components like this level of interest, this type of support. So the market only got rejection but cannot continue because there's no more strength except the sellers come to the level before. Yes.
What if when the market got to the level and we saw a reversal candlestick and the next candle is a weak candle? Should we just trust it and continue going with buyers?
You mean the red candle is a weak candle?
Yeah, no, like let's use this one now.
Okay.
Let's use this one now. Like this green candle, this inverted hammer green candle, the hammer green candle, I mean.
Okay, this.
The hammer green candle. Let's assume this candle is a weak candle and the so
Okay.
continue go with buyers.
Yes, you can go with buyers because if you look at this pattern on its own, this is a bullish around it. This is like this red candle engulf the body of this red bullish candle. That is a sign the price will go up. So it's not like bullish engulf, bearish engulfing. This is a bearish engulfing pattern, but this one is different. This is like bullish around a reversal candlestick. So from the support level, so it's a sign the price will go up. So these are the market conflict. Even though you see a very weak, I think I took a trade whereby I saw a very small green candle. And I was looking at the chart because I already planned to place a momentum at that level from that level. But the first candle I saw was a small green candle. And that small green candle, I just pay attention to what will be the next candle. So when I saw that the buyer still entered again on the next candle, that is when I decided to start buying the market to the nearest resistance level, which means small green candle on its own is a sign of reversal at this support level. Not this type of situation. This type of situation means the price is still very far away from the major level. So it will continue the price to the major level. So that is why the market did not reverse immediately. Even a small green candle can still reverse the market. Just like this small red candle still reverse the market. So that is a sign of reversal. Okay, so I think now. Okay. So any other question you can ask in the group. So I'll send for those of you who need the PDF, I will send the PDF tomorrow. So I'll prepare the PDF tomorrow. Good night, everyone, and have a nice day. All right.
Fine. I missed.